Hello to all of you. My name is Dale Ruther. I'm a partner at Boulder Marketing Company. I'm here today to talk about the Payroll Protection Program, or as we know it as the PPP loan program. The following are the top 10 questions that we get asked as advisors. Number one, when is the loan forgiveness period? The loan forgiveness period starts on the day the funds were deposited into your bank account and runs for the next 60 days. Number two, how do we calculate FTEs? There's a calculation that measures FTEs, which is going to determine an amount of forgiveness that you are for the loan based on two different time periods or a safe harbor or what is called a rehire exemption before June 30th. There are specific rules related to those, but those will help determine fractions that will determine how much of your loan is eligible for forgiveness. One thing to keep in mind at this point in time is what I call double haircut. The first one is you base the loan based on, let's say, calendar year 2019. That was when you were operating at full staff. If you use only half staff during the 60-day forgiveness period, you would also have a reduction of 50% from the amount that was given to you as a loan. So you start off basically at 50% of what will be eligible for forgiveness. But if you only have 50% of the FTEs also, you take another 50% haircut on the amount, and therefore really only 25% of the payroll will be forgiven. So therefore the FTEs become a critical part of measuring loan forgiveness going forward. Number three, how does the safe harbor calculation work? Basically, what that says is that before June 30th, you have equal to the amount of FTEs that you had on hand at February 15th, 2020, compared to the period before June 30th, 2020. In addition, the pay rate also has to be no less than 25%. If you do that, you don't have to go through the fractional calculations that I discussed in question number 2. Number 4, what payroll costs are forgiven? Payroll costs forgiven can only include up to $15,385, which is the pro rata amount of $100,000 during the 60-day period. We don't know whether they will allow bonuses to be paid during that period. We know that certain of the retirement benefits include annual payments such as defined contribution plans, defined benefit plans, money purchase pension plans. We're not sure. We're waiting a guidance from the SBA on how we're going to calculate that. It would seem reasonable to me that using a pro rata amount of the prior year or the estimated current year for that 60-day period would make sense, similar to how they are treating the $100,000 compensation. Number 5, what is the 75-25 rule? 75% of the forgiveness amount must be in payroll costs, and the balance, 25%, up to 25%, can be on other forgivable costs, as we discussed earlier, rent, utilities, and mortgage interest. Number 6, what basis of accounting is used during the forgiveness period? The CARES Act itself indicates that costs that are eligible for forgiveness are those that were paid and incurred during the forgiveness period. That creates a bit of a dilemma on the interpretation of that, and we're trying to understand what the SBA is meant by that, and we are waiting for guidance from them. At this point in time, we believe that the cash basis is the amount that you should be utilizing right now when calculating your forgiveness going forward. Number 7, what are the key questions and answers that are on the SBA Q&A appendixes that they release on a periodic basis? Question 7 discusses the $100,000 compensation and the fact that benefits are not included in that $100,000. Question 16 excludes the adjustment for taxes into compensation, therefore saying that gross payroll is the number that you use for compensation. Question 20 discusses what the 8-week period, when that begins. And question 40 talks about if you have laid off employees who refuse to return to work, how you can go about a notification process to inform them that you are offering back the same rate of pay with the same number of hours. And if they do not return to work, that it could be affected on their unemployment benefits that they are receiving. If you do that, then you're not required to include them in your FTE calculation. Question number 8 do we know the documentation that will be required for loan forgiveness, and what will the audit look like? What we know is that they are going to ask for things such as the payroll register, the quarterly payroll reports, the canceled checks, invoices, all of those type of things that support the expenditures that are eligible for forgiveness. From a audit standpoint, I would expect they're going to ask for the payroll in electronic format, because it is expected they're going to utilize artificial intelligence to perform these audits on the numbers, because they'll have to get through, there's over 30,000 audits or 30,000 loans over $2 million that are going to have to be audited. So using technology to do that is going to be important. Likely they're going to focus on 2 things in the audits. It's going to be fraud and inurement of benefits to highly compensated or owners. So I believe that if you stay away from those areas, more than likely there's not going to be a lot of findings in the audits. Number 9, what strategies can companies use to maximize loan forgiveness? Well, I guess it kind of depends on where did your sales volume end up during the forgiveness period. Were you shut down and you had no sales? Then basically you were just a flow-through entity of government money to keep people on payroll. If you were probably between 20 and 70%, okay, the monies that you received from the PPP more than likely would be used to offset your labor costs and your other fixed costs that are forgivable, the rent, the utilities, such that to minimize your operating losses for keeping the business going. If you were fortunate enough to be at 80% plus in terms of your sales volume in the forgiveness period, in essence, you're taking the labor cost out of your cost of goods sold and your G&A costs, and in effect, more than likely increasing your profitability at the end of the year. Number 10, what is the best way to account for these funds from an accounting standpoint as well as a GAAP treatment standpoint? Most of our clients have set up separate bank accounts to track these funds and actually create the documentation every time they move from the account that had the PPP funds into the operating account to pay the related expenses. Again, that gets you ready for the audit and the documentation you'll have to submit to the bank for the loan forgiveness. From a GAAP standpoint, we're still waiting on guidance from them. At this point in time, I believe it should be recorded as other income in the financial statements below operating income. But again, further guidance will be coming out on that. Together, we'll get it done. Thank you.